You're watching Business Incorporated live on Channels Television. Coming up, Nigeria's budget deficit hits 30.58 trillion naira in 7 years. And Kenya's private sector activity sinks to 15-month low. Plus, oil prices rebound after dropping to lowest in months on weak U.S. demand. Hello and welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday. Starting with markets in Africa, the NGX is marginally up again today, 0.02%. Doesn't seem to be out of the woods yet. While the GSE index is looking good, up at intraday by 0.94%. In North Africa, the EGX 30 is in the green by 1.31%, while Kenya also closed yesterday's session down by 0.23%. Remember, Kenyans head to the polls next week. And now to the Middle East. It's all red across the markets we track. In the UAE, the Abu Dhabi index not looking so good, down by 0.36%. Same with Dubai. The index is down about 0.38%. In other regions, the Saudi Arabia index and the Qatari index are both down 0.32 and 0.36% respectively. And moving on to Europe now, oil and politics don't mix well when it comes to war. DW's Ben Fajolin joins us now from Berlin with a number of stories making the headlines right there in Europe. Great to have you, Ben. So Ukraine's president has condemned comments from a former German leader with strong business ties to Russia. Can you tell us more about this?
Russian President Vladimir Putin's spokesman has confirmed that the former German Chancellor Gerhard Schröder met Putin in Moscow just last week. A German reporter had asked Schröder what he was doing there. It caught him off guard. Schröder said that he was there on holidays. Obviously, it was more than that. Schröder has now said to German media in an interview that Putin wants a negotiated solution to the war, and use the grain deal as an example of where something like this could be expanded into a ceasefire. When you mention that word ceasefire, the Ukrainians react extremely defensively because they do not want to give up a sliver of their land, of their country that the Russians have been slowly taking over in this war and prior to this invasion as well, over the past 8.5 years. Zelensky, the Ukrainian president, said that it is simply disgusting when former leaders of major states with European values work for Russia, which is at war against these values. Russia is using these people as messengers to say that the terrorist state allegedly wants negotiations. The Ukrainians obviously want to fight back and want to win this war. But Gerhard Schröder is a long-standing friend of Putin's. To give you a bit of background, Schröder left office here in 2005 and took on a job at Gazprom, which was looked down on at the time, people questioning what a German leader is suddenly doing, working for such a huge, high-profile company in Russia, accused of so many wrongdoings. That's a completely different story. I'm not going to go into that. But he then even went further and became a chairman on the supervisory board of Rosneft, another privatized oil company in Russia. The criticism, though, has become intense just recently, and in May, Gerhard Schröder stood down from his board position at Rosneft. He declined to take on a nomination for the board of Gazprom, but he has constantly refused to distance himself from the Russian leader. As a result, some privileges as a former German chancellor have been withdrawn. He faces an investigation by his party, the Social Democrats, over his links to the Kremlin. So you haven't heard the end of this story yet.
Yeah, I'll be looking out for more there. Ben, most European companies have withdrawn from Russia, but not the German energy company Wintershall Dea. Why are they still there?
Well, one reason would have to be the billions of euros in profits that this company is making in cooperation with Gazprom, the Russian state oil company. Wintershall Dea made 1.3 billion euros in the first half of this year. That was, of course, due to the higher oil prices, the rise in demand because of the recovery from this pandemic, and also supply problems and worries because of the war in Ukraine. Critics say the company is profiting from war. This company has invested in projects in joint ventures like Nord Stream 1 and 2, the second pipeline having been put on ice by the German government just before war broke out. Nord Stream 1 has been faltering with cuts made to Germany, which has the company, has the country scrambling, and Europe also concerned about whether or not it's going to get through winter. These projects were all built on the idea of building bridges with Russia, not tearing them down. And that's what both the company has said in the past and the government, the German government as well. But it has recently changed its tune ever since the invasion began. Many companies have been pulling out of Russia, not just German companies, but American and other multinationals. It's only now, though, that Wintershall has said it's no longer going to start any new projects with Russia, but it will hold on to its old ones. Its argument is that if it abandons joint ventures, the infrastructure will simply fall into Russian hands. Germany is calling, or many Germans are calling, for a windfall tax, like we've seen in the UK. The government there has introduced or announced a 25% windfall profits tax on earnings of oil and gas companies from British operations. Basically, companies profiting from the war, either directly or indirectly. Economists do argue, though, that it's difficult to actually pinpoint which companies are directly or indirectly profiting from war, and just what you do in this sort of situation, because when oil prices do fall to the bottom of the barrel, what do you do then? Do you support these companies in bad times, not only tax them during good times? So it is quite a quandary that governments and companies find themselves right in now, with a war raging here in Europe for the first time in a long time after such a long period of peace.
Quite interesting. But how are the oil markets faring, considering, the recent surge in prices, sparked by the war in Ukraine?
Well, oil prices have been one of the main drivers of inflation, the reason why you and I are paying more for almost everything right now. The oil price has been very volatile, but the trend had been up. Now, just in the past month, the trend has been more to the downside. It's still high, but we've seen a tumble just yesterday, and today crude has now given up almost all the gains seen in the aftermath of the invasion of Ukraine. There's been lower demand because of such high inflation, and the latest reason has been demand worries in the US, with energy data pointing to unexpectedly weak gasoline demand. And that's despite OPEC Plus and its decision to increase production by 100,000 barrels a day from next month. That's a smaller increase than the recent boosts that we've seen. However, economists say all in all it's encouraging. It does point to lingering questions about the direction of the economy. European stocks opened mixed today, but what many economists and analysts are saying is that the recovery's best days are over, but that it doesn't mean a downturn has begun. So a glimmer of hope there, a bit of good news to finish on.
All right, Ben, I guess the volatility in the oil market, continues at this time. Today is up, tomorrow is down. Either demand or supply concerns. We'll keep watching that. Thank you so much, Ben Fatulin, right there in Berlin. All right, now let's look to other markets. Now we see Asia markets trading higher following the rally on Wall Street as investors move on from tensions over U.S. House Speaker Nancy Pelosi's controversial visit to Taiwan. Hong Kong's Hang Seng Index jumped more than 2% earlier in the session and was up 1.76% in the final hour of trade. The Hang Seng Tech Index rose about 2.82%, with shares of Alibaba popping more than 4% ahead of its earnings results later Thursday. Elsewhere in Asia, Japan's Nikkei 225 rose 0.69% to 27,932 points, while the Topix index was about flat at 1,930.73 points. Toyota shares dropped 2.99% after reporting a fall in operating profit for April to June quarter. Kospi in South Korea gained by 0.47% to 2,473 points, and the Kosdaq advanced 1.2% to 825.16 points. In Australia, the S&P ASX 200 was fractionally lower at 6,974 points. And stock futures rose today after the major averages snapped a two-day slide, helped by robust earnings and stronger economic reports for June and July, and led investors to look past the possibility of a recession. Futures tagged to the Dow Jones Industrial Average gained 42 points, 0.1%, and the S&P 500 futures increased by 0.14%, and the Nasdaq 100 rose by 0.24%, with jobless claims report due later. Wall Street was coming off a strong session. Wednesday, the Dow advanced more than 400 points, while the S&P 500 hit its highest level since June. The tech-heavy Nasdaq Composite jumped about 2.5%. Now to our next conversation. The market Stanbic Bank Kenya Purchasing Managers Index remained below the 50.0 no change mark for the fourth successive month, falling to 46.3 from 46.8 in June. Well, Mercy Malinois joins us now for more. We have Mercy right here. Great to have you, Mercy.
Thank you so much, Lady.
So looking at these PMI readings below the 50-point range, what would you say is holding it down at this point?
Well, quite a lot has been happening around. And of course, if you look right now, we are headed to an election. So it has quite affected the economy and activities of the economy. At the same time, also, there has been reduced activities because a lot of investments was halted during COVID. And of course, so looking at, we are coming from COVID-19, we are recovering, and then we're heading down again to an elections period. So investor confidence has not been that much because of much uncertainty during this time. But of course, a lot of investors are looking to see and are weighing out what's the next government going to be, who's going to be in the next government, what changes are there going to be, and also looking at in terms of what's going to happen after elections. Will we have a runoff? Will we have a successful succession? So a lot of campaigning has been done over the last 2 months. There's been a lot of political activity, coupled up again with COVID, so it has quite affected the investor confidence during this time, which of course has sort of affected the private sector investment during this time.
So much uncertainty with the elections coming up, but that's next week. So after that, we can, hope to see some improvement. But we've seen the Kenyan shilling too. That's been on a downtrend, for a while now. How are you seeing it?
Interestingly, we've been doing a bit of analysis and looking at since the current government took office in 2013, the Kenyan shillings was trading at 86 shillings against the dollar. Right now, we are at about 119 against dollar. And of course, there are a lot of, apart from the current events that have been affecting the Kenyan economy and even global economy, you find that still we are grappling with a bit of import-export imbalance. But as much as it's not that bad, because as much as it's the Kenyan shillings stability is not that bad, it's because the weakening shilling is, the Kenyan shilling is weakening, then of course our imports become expensive. But at the same time, our exports become a bit more valuable. But you see at the same time, ladies, that the current is the the country is not really favoring us to gain those benefits of an increased exports, and of course, and the gains that we get. So of course, for currently, the Central Bank of Kenya has been trying to, give Kenyans and investors the confidence that we still have enough dollars to circulate. The Kenyan shilling is still strong, but of course, a lot of activities, and of course, coupled up with what is happening globally, has affected the Kenyan shilling greatly, which of course has affected us in the long term, considering now we are looking at high cost of living. The cost of things coming in the country are a bit expensive, and unfortunately, we are not exporting as much, so that we can also gain the dollars. But there has been a bit of confidence that has been expressed by the government that we are still stable. But of course, there's a lot of concern currently, but also we are looking at how else we can be able to recover, especially now during an election period.
Right.
Of other things also that affect the Kenyan shilling is remittances. As much as Kenyans have been sending money home for investments back home to help families, it has sort of helped to balance the Kenyan shilling and the dollar. But we are looking to see once how fast the Kenyan economy will recover, and of course how this will affect the Kenyan shilling against the dollar in the long run. But of course, we are still not immune to what is happening globally, unfortunately. So it's simply to see from the government side, from the Central Bank of Kenya, how do we ensure that the Kenyan shilling does not get to a weak point, to the sense that we are a bit vulnerable, but at the same time to ensure that we still have circulation for imports and for suppliers and for manufacturers to still be able to have some dollars to import raw materials and what we need in the country.
All right, Mercy, we'll keep watching those currencies. We've seen, African currencies actually pressured with that run we've seen with US dollar. Thank you so much, Mercy Milanoy, business journalist right there in Kenya. It was great having you.
Thank you.
All right, now, after the break, more stories on the African continent. Do stay with us. This is Business Incorporated. Welcome back. Now to our next conversation. We see poultry farmers are sweltering under the pressure of increased cost of animal feed. This has made the price of eggs spike by as much as 186%, about 2,200 naira a tray, with a surge in price of other bacon ingredients. Let's talk to Olufunto Ajenifuja, now analyst with FDC. Great to have you on the program.
Thank you for having me. So
I remember at some point I could buy a crate of egg for about 800 naira. I can't do that anymore. It's 2,200 now. How's this going to impact our breakfast menu?
Okay, so as you said, right now egg prices have increased by about 100. Well, the price of a crate of eggs has increased by about 186%. And what is driving this price increase? Simply put, higher cost of inputs. So the limitations of supplies are many, and these are related to deficient infrastructures when it comes to distributing these eggs, when it comes to the commercialization of these eggs, the higher cost of feeds. So feed costs account for 65 to 73% of egg production costs. And also things like getting the vaccinations that poultry farmers need. All these things have essentially pushed some poultry farmers out of the sector altogether. So some people have actually lost their jobs. So what happens when there is limited supply but an increased demand? Because, eggs are very important on the Nigerian breakfast menu. You have yam and eggs, plantain and eggs. And so we're now seeing the cost of eggs go up because the raw materials, the veterinary drugs that are needed, transportation costs, everything has gone up. So yeah, that's essentially what is causing this exponential price increase. But in terms of the future of egg production in Nigeria, and I need to mention this, that Nigeria is the largest egg producer in Africa.
The largest?
Yes, followed by South Africa. So in terms of the future of egg production in Nigeria, these limitations need to be addressed in order to secure the future of egg production in Nigeria.
But what do you see for the long-term consumption? Because we've heard about those health concerns when it comes to high cholesterol and all of that. What do you see going forward for consumption?
Yes, eggs are loaded with cholesterol, so about 200 milligrams in an average size egg, which is a lot. And when you actually compare it with some other items in the typical Nigerian diet, high cholesterol, and there are certain fears that come from eating eggs and like what it does to the heart, and this can make people avoid eggs in the future. However, when we look at things like consumer taste, and like I said, it's just a staple, it's a staple commodity, like it's a staple, especially now that it's actually considered the cheapest source of protein in Nigeria, especially because we're seeing the price increase of other proteins that people eat. So health concerns are definitely important because more and more people are becoming more health conscious. So we could see egg consumption fall. However, this is not that likely.
Right, and obviously, you know, bakers, you know, also use eggs for their baking operations. But I've seen cakes actually, you know, I like cakes. I've seen prices really go up. How's this going to be going forward? Because that means we're going to see more, you know, increases when it comes to the bakers too.
Yeah, so bakers use eggs a lot, and obviously they are dealing with other costs as well because new food items across the board have gone up. So in terms of how this is going to affect that, obviously they need to find alternatives, and there aren't really enough alternatives for egg, but there is powdered egg that is used by a lot of confectionery companies and bakers, and right now the domestic production only meets about 5% of what is actually needed. So if we are able to maybe push the local production of powdered eggs that bakers can use, this will definitely alleviate some of the costs that the cost that they are paying, and this would obviously mean a cheaper price for the consumer, because you know powdered egg is simply dehydrated egg. It's the same thing, it still has the same nutrients. It actually has advantages when it comes to food consistency, thickness, the chewiness of whatever they are baking. You know, right now we only have two powdered egg plants, so one in Ondo, one in Ogun. So if we're just able to maybe nurture that sector a bit, I think that would actually be beneficial for bakers.
All right. Well, we'll keep watching how bakers react to all of this. Thank you so much, Lufutora Jenny Fuja, analyst with Financial Derivatives Company. It's great having you.
Thank you for having me.
All right, now moving on to other stories now. A new report has revealed Kenyan banks are likely to struggle to reach their 2022 tax contribution targets due to prevailing economic conditions. Even as a bank's 2021 tax contribution hit a 5-year high of about 129.52 billion shillings, surpassing 2020's value of about 104.8 billion shillings, about 23.59% increase. Its total tax contribution to the Kenyan banking sector report, that was by PwC, the current economic climate will likely reduce the volume and value of bank transactions in 2022. And S&P Global Ratings said that around 38% of firms express a positive outlook for the next 12 months in hopes of improving demand, and as price measures of expectations remained lower than those seen at the beginning of the year. This comes as the S&P Global Purchasing Managers Index picked up for a third successive month in July, helped by improving new orders, output, and employment numbers. The PMI rose to a 14-month high of 52.7 points in July, up slightly from 52.5 points in June, to signal a solid improvement in the health of the private sector economy. Business conditions have now strengthened for 7 consecutive months, ignoring the downturn caused by ongoing geopolitical tensions. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.